How much higher can gold and silver go? The gold and silver bull runs have been historical, and our members at selfishinvesting.com have benefited immensely. Gold smashing through $4,800 an ounce and silver blasting past $95 an ounce already this year. And it's fueled by geopolitics, central bank buying, low real rates, and silver's industrial squeeze. But every rally eventually ends. So here's what could kill this one. In other words, for our members who are sitting on fat profits, don't get piggish. Now, first of all, if the geopolitics around the world start to calm, it's doubtful, but if they do, that mean that safe haven buying will start to disappear. Already we saw the Greenland talks resolve, but interestingly, gold and silver are still marching higher because they're doing so for a lot of those other reasons we talked about. Russia-Ukraine and Gaza-Iran tensions, well, if they cool, that also could be a bad news for the precious metals. Trade war threats could fizzle. And those types of premiums would evaporate quick in these precious metals. We also could see a stronger dollar or rising real yields, a hawkish Fed pivot from hotter inflation data, or the dollar ripping higher, and that jacks up the opportunity costs for non-yielding metals. And right now, lower real rates have been rocket fuel, so a reversal of that would crush them. Again, these are unlikely events, but these are things that investors should be aware of. We could also see economic boom or policy wins where Trump's deregulation and tariffs without blowback supercharges growth, and that could push rates up. But again, our argument is that such strong economies are actually a recipe for the Fed to give Fed room to keep rates steady. Now, we could also see a technical exhaustion and profit taking because there's a lot of overbought signals because they've been streaking, and that can result in a lot of volatility. So keep that in mind. Specifically with gold, we could see central bank demand slowing if diversification into gold eases or emerging market buying pauses. In silver specific ways, if the industrial demand for silver cracks, that is if the solar EV build out slows or substitution kicks in at high prices, that would dampen the demand for silver. We could also see supply relief from China easing exporting curbs. And we could also see a mining ramp up, which would flip the deficit story. Extreme outperformance to gold in terms of the ratio being at decade lows screams mean reversion. We got to keep an eye out for that on silver. But the bottom line is that this feels structural with de-dollarization and deficits that are in the favor of higher prices for precious metals. But the cracks are spiking yields on the long bonds, tensions cooling, the dollar ripping, or industrial slowdowns. If none hit, then expect higher prices ahead, but also expect chop because silver does swing harder than gold. So always keep your positions manageable and trail your stops. At Virtue of Selfish Investing, that is www.selfishinvesting.com. We keep it dead simple. It's all about the profits, not the noise, not the headlines, not the smart money narratives, not the macro pontificating for its own sake, although we love to pontificate. Just clear setups with the best risk reward we can find day in and day out. We hunt for asymmetry, where the potential upside dwarfs the downside, so you can sleep at night even when the position is on. We cut losers fast, let winners run, and stack the odds with disciplined sizing and stops. No hero trades, no ego, no being right at the expense of the P&L. The site exists so you can focus on what actually moves the needle. High conviction ideas backed by price, volume, fundamentals, and sentiment alignment, executed with ruthless capital preservation. Profits compound. Everything else is commentary. If you're here, you already get it. Let's keep stacking. Stay selfish in the best way.